Great. So if you look at that question, we are being told to do what? We are being told that Urembo Lifestyle Officers offers 3 different types of body, grooming, and fitness services. These are salon, gym, and barbershop. Using the same staff, various estimates for the next year have been made as follows. We have salon, gym, and barbershop. Then we have service fee, we have variable material cost, variable labor cost, fixed overheads, labor hours per client, additional information. The total fixed cost for the next year is expected to be 400,000, or the total fixed cost. The budgeted maximum demand for the client for the next year for the services is estimated as follows: salon 3,000, gym 1,000, barbershop 1,500. Urembo Lifestyle has a maximum of 9,900 labor hours available next year. If the business were to offer salon services only, calculate the break-even point or break-even number of clients. So I think we did that. We are dealing with one product, so the break-even point in units is equal to total fixed cost over S minus V, which is the same as contribution margin. So we are told that assume they are only offering one service, which is break-even point of single product. Break-even point of single product. Now, having done that, we should be able to identify this. Our total fixed cost should be equivalent to what figure? Our total fixed cost for the salon, we are dealing with the salon there as the only product or service they are offering. Our total fixed cost is equivalent to 400,000. Then we need variable costs. Our variable cost per unit of that service, that is salon, I'm able to see variable material costs of 140. I'm able to see variable labor cost of 60. And do we have any other variable cost that we are leaving out? Do we have any other variable cost that we are leaving out? No. So it will be equivalent to 200. Having done that, let's now get back to our formula and fix in what we've been able to identify. Total fixed cost, 400,000. Then contribution margin, of course, is S minus V, which is 300 minus 200. So this one here will give us 100. Which some people are taking S minus V down here, or they just take contribution margin. So we can decide to bring our contribution margin here and be able to get the break-even point in units. Tutakuwa na ngapi? Break-even point in units tutakuwa na ngapi? 4,000. I want you to go ahead and get the break-even point in shillings. The break-even point in shillings, is equivalent to total fixed cost divided by contribution margin ratio. Contribution margin ratio is equivalent to contribution margin divided by sales per unit. Do we have the two? Yes. Contribution margin is 100. Then sales is equivalent to 300. If that is divided, what will you have? If that is divided, what will you have? Total fixed cost, 400,000, divided by the ratio, which is 0.3. What is our shillings? Break-even point in shillings ni ngapi? 120,000 or 1.2? 1.2. So that is the break-even point in shillings of single product. That is the break-even point of single products. Maybe out of nowhere, I'd like us to, within the same, I want us to calculate what we call margin of safety as a percentage. Margin of safety in units is equivalent to expected sales. So look at the demand in the market. The demand in the market. The maximum demand is 3,000. So our break-even point, of course, is even more than the demand. Maybe you are going to look for a question which will enable you to calculate that. But that's what you need to understand. If you are dealing with multiple products, I believe it is in this class that I gave you the formula. Is it in this class that I gave you the formula of dealing with multiple products? Have we done something about the multiple products? No? Okay. Multiple products, the break-even point in units is equivalent to total fixed cost divided by average or summation of average contribution margin ratio. The average summation of the average contribution margin ratio is basically equivalent to alpha times contribution margin times contribution margin. Now, this alpha is basically the sales mix in units. The sales mix in units. What are we talking about here? What are we talking about here? What are we talking about here? So this is what you need to have for the multiple products. But I need to get a clear question on how to deal with the multiple products, which will be in our next illustration. But that is what you need to have. So let's get to the second part of that question. We are told, prepare the limiting factor mix schedule to show the number of clients per service that maximizes profitability. So we want to come up now with what we are discussing the limiting factor. Limiting factor here, you can even be asked to give us the definition of a limiting factor. If you are told to give us the definition of a limiting factor, the market demands 10,000 units. Not even the market. Start it from yourself. You have one, you need to pay for some expenses. One, you are supposed to pay school fees. You are supposed to do maybe investments or saving. You're supposed to take care of your health. So maybe health care. You are supposed to do what? You're supposed to take care of maybe food. You're supposed to take care of clothing, something of that kind. All these are things that you're supposed to meet. All those things are supposed to be met. But you have a very huge item here. One, your income. Your income, maybe, actually all of us are maybe taking care of this, but in different proportion. They are taking care of this in different proportions. Maybe under school fee, somebody is spending 150,000 per month. Under investment, somebody is taking around 500,000 per month. Under healthcare, somebody is talking about maybe 50,000 per month. Food, somebody is talking about 30,000 per month. Clothing, somebody is talking about 80,000 per month. That's what somebody is doing. Do you think the income will be equivalent to 100,000? Do you think their income is equivalent to 100,000? No. What about if this one is increased to this? What will happen to this person? They'll have to increase the amounts, the share of all these things they're going to increase. What about if another 0 is added? Will they retain these amounts? No. They are going to increase. They are going to increase the proportion that is going to all these options. So what do I mean here? Whatever you want to do, so let's say for a company or for as an individual, these are the things that you want to achieve. But this income is a limiting resource. For you to be able to achieve all this, you must consider the capability of your income. And therefore, this income is a limiting factor. It restricts you to consume these particular items up to a given level. You cannot go beyond that level, because the moment you go beyond that level, you're going to exceed this limiting resource. Back to companies. They really love to produce everything that the market demands. But one, the cost of labor is very expensive. They cannot afford to get that expensive or experienced labor to be able to produce all the goods that the market demands. They are not able to avail the funds to purchase all the raw material needed to do what? To produce the same units demanded by the market. So what do? They are going to do rationing. So that rationing is now the limiting factor concept. So the limiting factor, this is a resource which the company has to apportion in a given quantity to meet or to maximize their return out of that resource. They have to proportion their outputs or units or services to be able to maximize their returns or profits from that particular limited resource. So that's what we have all about the limiting factor. You can frame it in your own language, but basically we are going to be able to see how limiting factor operates. So having done that, we have, as you can see here, we have these three services being offered. We have salon, we have gym, we have barber shop. So that is what they have, the three. For a service industry, these are services. For a manufacturing, of course, you're going to deal with physical goods. Now, for us to get the limiting factor, our first procedure is to get contribution. After getting contribution, we get contribution per limiting factor. After getting that, you rank these products. Having ranked, you look at the proportion that's going to be used in sharing all that. So the first thing you're going to do here for us to get contribution would be the selling price or service fee. So the service fee for salon, we have 300, we have 390, we have 200. Then we need to do what? To less variable costs. The variable cost here, one of them is a material cost. Then we have variable labor cost. I've indicated less variable costs already. We know that they are variable. Now, our variable material cost is 140.60. We have 180, 100. We have 150. If that is done, we are going to get what we call contribution. So it is less variable cost. Someone to give us the contribution. I believe this one we calculated. It is 300 minus 200, 100. How about this other one? How about the other one? It's also 100. I need your 100 or 110, 110. Please confirm. Okay, it is 110. How about this? 200 less 150. Tutakuwa na 50. This step applies to all the questions under limiting factor. After getting contribution, you now need to give us what we call limiting factor. You need to give us limiting factor per unit. Limiting factor per unit. There's difference between limiting factor per unit and the cost of limiting factor per unit. What do I mean? In some questions, they are going to give you the labor costs. For example, here, we are given labor cost to be 60,000. I mean 60, is it? But look at the question. We are being told in additional information number 3, Urembo Lifestyles has a maximum of 9,900 labor hours available next year. So we do not know whether that labor hours is the limiting factor. Now, the labor hours given there, of course, labor hours is the limiting factor as per this question. So I'm not going to take this to be the limiting factor per unit. This is the cost of labor. So it means somewhere within that question, the examiner will give you this, either labor rate per hour, or the examiner will give you the labor hours per unit. So help me understand, which one have you been given? Labor hours per unit, labor rate per hour. What we are using here, the limiting factor per unit, as per this particular question, is labor hours per unit. Labor hours per unit. So what have we been given in the question? Do we have labor hours per unit or we have labor rate per hour? Tuko na kitu gani? What do we have in the question? What do we have in the question? Whatever you're looking for is the limiting factor per unit. Our limiting factor, we've been able to see labor hours is limited to 9,900. So in that question, have we been given labor hours per unit somewhere? We have labor hours per unit. So this is what you need to understand. Labor hours per unit has been given there as per unit or per client. Here you are dealing with the client, of course, maybe that is it. So we have 2 hours. We have 3 hours. We have 1.5 hours. In some questions, this is what they are going to do. I need 2 hours. I need 3 hours. I need 1.5. So if I need 2 hours to produce 1 unit of salon or to serve 1 client in the salon, the company is spending 60 shillings. So what is the labor rate per hour? Labor rate per hour itakuwa ngapi hapo? 30, is it? That is salon. If I get to gym, they have paid for the labor cost of 100 and the hours is 3. What is the labor rate per hour there? 100 divided by 3, is it? So it will be 33.3 is the labor rate per hour. How about this other side? The labor cost is 50. They have taken 1.5 hours to pay for this. So how much is the labor rate for the barber shop? 50 divided by 1.5. It is also 33.3. So that is, in most cases, you're going to find that this rate will be the same. But it does not mean in all questions the rate will be the same. So this one here, in some questions, if they give you this, we use the rate to get the labor hours. For example, if you're given this rate, but we need labor hours per unit, you'll be asking yourself, if 1 hour is equal to 30 shillings, that is what we have, the labor rate per hour. How many hours do we need when the company paid 60 shillings? We take 60 times 1 hour, divide by 30 to give us 2 hours. So this 2 hours is what we are looking for. You put it here. But now in this question, the examiner wanted these people to do away with this paper, and the examiner decided to give you the limiting factor directly without calculating anything. So having done that, you now give us the contribution per limiting factor. Contribution per limiting factor. Contribution per labor hour. I need 2 hours to produce 1 unit or to serve 1 client under saloon. And the contribution under saloon is 100. So for every 2 hours that I'm going to spend, how much will it generate? For the 2 hours that I'm going to spend, how much will it generate? How many shillings now per hour under this? Contribution per limiting factor. Contribution per hour. Take 100 divide by this, tutapata ngapi? You're going to have. So for every 1 hour, the company is going to make 50 shillings. How about this part? 110 divided by 3. 110 divided by 3 tutakuwa na ngapi? 36.66. How about this? 50 divided by 1.5. 50 divided by 1.5 tutakuwa na ngapi? 50 divided by 1.5. 33. So that is the contribution per limiting factor. For every 1 hour I'm going to use under saloon, I will be getting 50 shillings contribution. For every 1 hour under gym, I'm going to get 36.66. For every 1 hour I'm going to spend under barber shop, I'm going to get a profit of or contribution of 3.33. The higher the contribution, the better for the company, or the more profitable the product or department is. So let's now do the ranking. Let's do the ranking. Let's do the ranking. So which one will be number 1? The higher the value, the better for the company. So which one will be number 1? This one here, is it? Then number 2, this one here. Then number 3, the last one here. That's how we do it all through. Now, having done that, I've known number 1, number 2, number 3. Is it? I've known number 1, number 2, number 3. Do we have somewhere where you are told the maximum demand by the market is this number of units or number of clients? Do we have something of that kind? There's somewhere you are told the maximum demand in the market is equivalent to this. Salon has got this, gym has got this, barbershop has got this. Now, we were told that labor hours are limited to 9,900. Labor hours are limited to 9,900. Okay, having done that, we've been able to see that salon comes first. Is it? In the salon, we need 2 hours to produce 1 or to serve 1 client. In the salon, we need 2 hours to serve 1 client. We need 2 hours to serve 1 client. Now, within that department, what is the maximum number of clients in the salon? 3,000. Is it? Are you able to see that 3,000 somewhere? Are we able to see that 3,000 somewhere? So it means you need 2 hours to serve 1 client under salon, but the maximum there is 3,000. So how many hours do we need in total? 6,000 hours in the saloon department. Is it? If you get 6,000 hours, you'll be able to serve all the clients in the saloon. What is the balance? What is the balance of the labor hours? The company is able to provide a maximum of 9,900. We've already utilized 6,000 in the saloon department. So the balance will be 9,900 less 6,000. Tutakuwa na ngapi? 3,900 hours. 3,900 hours. Let's go to number 2. Number 2 ni gani? Gym. We have a balance of 3,900, but in the gym, you'll ask yourself, what is the maximum demand or number of clients in the gym? The maximum number of clients in the gym, as per the market, ni wangapi? Number of clients in the gym, we need to serve 1,000 clients. Is it? We need to serve 1,000 clients. And in gym, one client requires 3 hours. For us to serve one client, we need 3 hours. So take that 1,000 by 3 hours. Then you tell me the number of hours you need in the gym department. Unahitaji how many hours? How many hours do we need in the gym? We need 3,000 hours. Are we able to get the balance? The balance here was 3,900. We've used 3,000 to serve the customers in the gym. So our balance is equivalent to 900 hours. 900 hours, and we've not served these people in the barber shop. Now, in the barber shop, I want us to reason together. We have a balance of 900, which will be used to serve those clients in the barber shop. As per the market demand, how many clients should we serve in the barber shop? How many clients? How many clients are supposed to be served in the barber shop? How many clients? 1,000. Don't write anything under this part, first of all. We have 1,500 clients, is it? And for us to serve each client, we need 1.5 hours. So how many hours do we need in total to serve all these clients? How many hours do we need in total to serve all these clients? We need 22. We need 2250 hours. We need 2250 hours. If we need 2250 hours, yet the balance is only 900. What has happened? Tuko na shida gani hapo? We need 2250 to serve the 1,500 clients. But the balance hours that are remaining is 900. Sasa tuko na shida gani hapo? Which problem do we have? We have a deficit. Is it? We have a deficit. That deficit is what we call the limiting or the shortfall. That deficit is what we call the shortfall. Please adjust the board. Oh, that deficit is what we call the shortfall. That deficit is what we call the shortfall. So if you are going to be given a question and then you are told to identify or calculate the shortfall, then it is the difference. We need 2250, yet our balance is 900. So give us the shortfall first of all. Shortfall itakuwa ngapi? Give us the shortfall. Our shortfall will be what we need minus what we have. Shortfall in hours itakuwa ngapi? 1350 hours. That is the shortfall. That is the deficit in the total hours needed. Or in other words, you can also do it this way. Maybe if you don't want to go that long procedure, you'll come and give us labor hours of the company are limited to 9,900. Then under salon, I believe you're able to see under salon here, we have to serve 3,000 clients and each requires 2 hours. So that is 6,000 hours. Under gym, we need to serve 1,000 clients and each requires 3 hours. That is 3,000. Under barber shop, we need to serve 1,500 clients at 1.5, which will be equivalent to 2,250. So the total hours needed or available hours, then we have hours needed. So the hours needed, we basically add these ones here. Ukiongeza utakuwa na ngapi total? Hours needed, then you give us deficit or surplus. Hours needed tutakuwa na ngapi if you add everything? If you add everything tutakuwa na ngapi? 11,250. So you have 11,250. 11,250 is what you need, but you only have 9,900. Can you give us the deficit? Or now let's call this one here shortfall. Shortfall itakuwa ngapi? 13,50. That is what you are able to calculate again using this other procedure. So if you want to save on time, maybe you understand, follow this, you get your 2 marks if they ask you about the shortfall. If you want to now deal with the limiting factor and so on, just this procedure, have this part here. Have this part here. Now, having done that, of course, I was explaining this part of barbershop, which we've seen, but you want to see, we cannot produce all the 1,500 units. No, the limiting factor is restricting us to 900 hours only. So how will we utilize the balance that is 900 hours to know the number of clients we are going to serve under barbershop? You will tell us that for us to serve 1 client in the barbershop, we require 1.5 hours. Is equivalent to 1 client. So how many clients will we serve if we are given 900 hours? How many clients will we serve if we are given 900 hours? I'll be having 900 hours multiplied by 1 client divided by 1.5 hours. How many clients will I serve? How many clients will I serve? How many clients will I serve? 600 clients. Only 600 clients will be served. Now, how many clients are not going to get the service from this company? How many clients are not going to get the service from that company? How many clients are going to get the service, are not going to get the service? Ni wangapi? Ni wangapi? Now, those, if you've been to town, have you ever encountered this? You've gone to a shop, you want maybe 50 pieces of a given product. They tell you, just sit down, we are going to give you the service. But if you actually go to their store, they don't have the 50 pieces, they only have 30. Hizi 20 watatoa wapi? Watakwambia, ngoja hapa kidogo, tuende kwa store. Have you ever encountered such a thing? They will tell you, just wait for us, let's get to our store so that we bring the balance. Umaisikia kitu kama hiyo? Umaisikia kitu kama hiyo? This is what they are doing. They are going to do what? They are going to outsource. outsourcing. So they are going to outsource this service so that the 900 clients will be served, but not by this company. They're going to outsource someone else to serve them. So the outsourcing of service will be done for how many clients? We only need to serve 1,500, but we are able to serve 600. So the 900 that are remaining, we are going to outsource this service from somewhere. Is it? We are going to outsource this service. So that is what we have if we are dealing with service. If you are dealing with goods, now, if you are dealing with goods, this is what you are going to do. This is what you are going to do. Or even the same service. So we have those served by the company, those served by the company. Those served by the company, we are going to have in the salon, they are going to serve all of them 3,000. In the gym, they are going to serve all of them 1,000. In the barber shop, they are going to serve how many clients? 600. Then those served by the company, then outsourced service. Outsourced service will be outsourced to serve those in the barber shop. Now watu wenye kwa barber shop ni wangapi? 900. Have they been able to meet the entire market demand? Have they been able to meet the entire market demand? They have been able to meet the entire market demand by offering the service with the resource which they have. Then any deficit they outsource from outside. So if you're dealing with physical goods, this one here will be called purchased goods. And this one here will be goods that have been produced by the company. These ones are goods that have been purchased, and these ones have been produced by the same company. So the examiner is very funny. Of course, at management accounting level, they'll just leave you at that point. They want you to just help them identify this, then you stop at that point. But we now go further, or if CASLEB would like to bring this to make sense, they'll now tell you that these ones that were outsourced, they were outsourced at a given price. These ones that are outsourced were outsourced at a given price. So are you able to give us the entire profit for the whole company? The answer is yes. Are you able to give us the maximum profit based on this mixture? Yes, we are going to do that. So having done that, we've identified what we are supposed to do. But this is what is going to happen. So let's read the question and see. Let's read the question and see what they want us to do. Roman 2, prepare the limiting factor mix schedule to show the number of clients per service that maximizes the profitability. The number of clients per service that maximizes profitability. Sio tumemalizana nayo hapa. So I'll just come here and say, salon, 6,000, all of them will be served because I've done ranking. Then I go to gym, I have a balance of 3,900, but gym needs 3,000. So all of them will be served. The balance of 900 cannot serve 1,500 clients in the barber shop. So what do? I want to know the number of clients that will be served by the 900 hours, which you've been able to see. Then I come and give you a very big tick. So by doing that, you are done with Roman 2 of the question, which is giving you free 6 marks. Inakupatia free 6 marks. So let's go to the last part, the finalizing part, where we are told to do what? The maximum net profit achievable based on service mix determined in 1 or A2 above. We've identified the mixture. Is it? We've identified the mixture. So as a bright student, I know very well that this section will not change. The contribution It is selling price minus variable cost. It will not change. The only thing that's going to affect these ones is the units that were produced. So I will go to Roman 3, copy everything here except this part. Copy everything here except this part. Copy everything there except that part. After copying everything, what do? I only need to give here clients served or units produced. So the client served 1, under saloon, I'm going to serve 3,000. Under gym, I'm going to serve 1,000. Under barber shop, I'm going to serve 600. See, I'm now able to get total contribution. I'm now able to get total contribution. So here I will be having I'll be having 300,000. Is it? Confirm, please. I'll be having 300,000. Here I'll be having 110,000. And then here I'll be having, will it be 30,000? Will it be 30,000? Confirm if that is it. Confirm, please. People are quiet. Are we together? We will be having 30,000, 110, 300,000. See, tuko na hizo vitu zote. So this is total contribution of the clients that were served by the company or the goods that were produced by the company. In some questions, which is not in this case, in some questions, this service which was outsourced, they're going to tell you that the outsider accepted to offer the same service at a cost of, let's say 55. At a cost of 55. The cost of offering this service, still, you are going to charge. Remember, whoever is telling you that, let me go and pick this from our store, they're going to charge you the same price, including what they're going to get from the other person. The other person has accepted to give them that product at 55. So what do? This is the contribution of goods that have the clients that have been served. Then outsourced service. Outsourced service will tell us that the 900 clients that were served, outsourced service, we have 900, which you are charged 55. But for us here, we are dealing with contribution. So how do we get contribution? It is selling price, which is 200 less 55, which will be 145. So you take 145 by this. Niambie contribution unapata ni ngapi? Contribution unapata hapa ni ngapi? Contribution utapata hapa ni ngapi? Contribution itakuwa ngapi? 105 or 145 by 900. 145 by 900 tutakuwa na ngapi? 130,500. Is it 130,500? So give us now, remember you're supposed to prepare the income statement. Total contribution less total fixed costs for you to be able to give us net profit. So give us the total contribution. Total contribution will be the contribution for those goods that or services that were offered by the company and the ones that were outsourced. The ones offered by the company, we have 300,000 plus 110,000 will be 410,000 plus 30,000 will be 440,000. 440,000 plus 130,000 will be 570,500. Confirm 570,500. Is it the correct? Confirm that, then you put it down here now. 5. Haya, mtu ashapotea. Tunasema your total contribution. How do we get contribution? Contribution was service fee minus total variable cost. The cost of outsourcing this service, whoever was giving you this service or was offering this service on your behalf, ameenda kuchukua kwa store. Uko kwa store, ameuziwa na 55. Tunaelewana? Ameenda kuchukua wapi? Kwa store. Na uko kwa store, amepeana 55 ili au watu wa offer your service. Now, if they are going to offer that service in-house, they were having cost of 150, that is variable. So 200 minus 150, we are giving 50. When this person went to the store, he was told to pay 55. He paid that 55. So that is the cost. That is the cost or the amount paid to purchase or to the fee that was charged on that service. When having paid 55, wewe ukikuja, atakucharge bado how much? 200 per client. So they're going to make a lot of money. That is, for every client they're going to serve, they're going to make 200 less 55, which is 145 per client. Where did you get 55? Mtu amuelezee haraka haraka. How did we get this 55? How did we get this 55? If 55 tulitoa wapi? If 55 tulitoa wapi? Thank you. Outsourcing fee. It was an assumption. We assumed that this 900 hatutawasahau hivyo. We were told that they were fully served. So if they were served, these people outsourced the service at a cost of 55. That is the cost of offering that service. So tukiongeza kila kitu was 500 and hapa tulikuwa na ngapi? Hapa tulikuwa na 570 what? Hapa tulikuwa na 570 something. 570, 500. 570, 500 less total fixed cost. Our total fixed cost as per the question. Tunaweza kumbuka? Our total fixed cost as per the question. Tunaweza kumbuka kweli? Our total fixed cost ilikuwa 400,000. Give us the profit of this company. The profit of this company itakuwa ngapi? 170, 500. As per the assumption that even these 900 people were served. As per that assumption. Let's get to the question. Were these people really served? The 900? Were they really served? Were they really served? Our to 900, were they really served by this company? The maximum net profit achievable based on service mix determined in A2 above. Were they served? Were they served? No. So we are not going to outsource. That's number one. We are not going to outsource anything. And if we don't outsource, anything related to outsourcing should be taken away. So we are now answering the question. We are now answering the question as per August 2023. Question number 3A, part 3. Having done the rationing, this is what the company managed to provide. And that's what we have here. So what is our total contribution? This plus this plus this. Itakuwa ngapi? 440? Is it 440,000? If you add all the contributions, 440,000 less total fixed cost, which is 400,000. Tutakuwa na ngapi net profit? So as per the question, without assuming anything, this is the result. As per the question, without assuming anything, this is the result. Tuko pamoja? Are we together? Are we together up to that point? Are we together up to that point? Great. So having seen that, it means we can now handle August or December 2022 CPA, December 2022. So let's now look at December 2022 CPA, December 2022. December 2022. December 2022 CPA. Very fast, December 2022 CPA. Let's look at it together. December 2022 CPA, December 2022. Have you been able to access it? December 2022. December 2022 CPA. So December 2022 CPA question number 2B, we are being told that Lengo Limited manufactures and sells 2 products, L and G, to a number of customers. The company is currently preparing its budget for the year ending 31st of December 2023. The cost, selling prices, and demand units details for its 2 products are as follows. We have product L and G. Selling price per unit, variable cost per unit entails direct material Q, direct material T, direct labor, overhead, that is variable overhead. Then we have fixed production cost per unit. Maximum sales demand for the month, we have 1,000, then 3,000 units. Additional information number 1, the fixed production cost per unit is based upon an absorption rate of shillings 200 per direct labor hour, and total annual production activity is 90,000 direct labor hours. 1/12 of the annual fixed production cost will be incurred. In addition to the above costs, non-production overhead costs are expected to be 577,500. During the period, the availability of material Q is expected to be limited to 31,250. It is the policy of Lengo Limited not to hold inventory of finished goods. So whatever is purchased, or whatever is produced is sold. Then required, compute the shortfall in liters for material Q. The optimal production mix based on priority ranking. The net profit at optimal production mix. Sio tumeshinda? Very, very simple. So let's now go ahead and look at the question. We have product L, we have product G. What do we need to start with? Selling price. Tumepewa selling price? Yes, selling price given there, 2,000, 2,100. Then we are given variable costs per unit. You can decide to put all of them one by one, or you give just a total of variable cost. So less variable cost. Remember, I'm giving you a format whereby you'll be able to get everything at once. Whereby you'll be able to get everything at once. But still, if you want to go in order in which the examiner wants you to tackle the question, then this one is not necessary in Roman 1 of the question. Roman 1 of the question, they want you to calculate the shortfall or deficit in liters of material Q. Here, the examiner is specific and telling you that the material Q is what we have in short supply. It is not there in plenty. So if it is limited to how many liters? Product L. So we are writing with material Q available or availed. The material Q availed is there up to our what quantity? 31,250. 31,250 liters. Now, how many units, how many liters of material Q do we need to produce 1 unit of L? How many liters of material Q do we need to produce 1 unit of L? How many liters? How many liters? How many liters of material Q do we need to produce 1 unit of L? Watu wote wameniangusha. What did we say? What you are given there is the cost of material Q used to produce 1 unit of L. Lakini liters required to produce 1 unit of L is not 200. Watu wote wameniangusha. Look at what we are given there. First of all, direct material Q, the cost per liter is 1 liter. So material Q, 1 liter of Q is equivalent to shillings 25. So tumepewa 25 hapo. Then we are told that for them to produce 1 unit of L, the company spent shillings 200. Sasa, how many liters did they use? How many liters? 8 liters. That is what we need. We need 8 liters of material Q to produce 1 unit of L. But how many units of L is the market demanding? How many units of L is the market demanding? Maximum sales demand for the month. Market inahitaji how many units of L? How many units of L does the market demand? 1,000 units of L. So if we need 8 liters to produce 1 unit of L, if we need 8 liters to produce 1 unit of L, and the company or the market demands 1,000, it means we need 8,000. We need 8,000 liters to produce all the units demanded by the market. That is product L. How about G? How about G? The cost 1 liter of Q is equal to shillings 25. It has not changed. We have been given the same, but for them to produce 1 unit of G, how much did they spend? For them to produce 1 unit of G, they spent 250 shillings. So how many liters do they need to produce 1 unit of G? How many liters do they need to produce 1 unit of G? 10 liters. They need 10 liters to produce 1 unit of G. But what is the demand as per the market? What is the demand of G? The market is demanding 3,000. I want us to be very keen. 3,000. If the market is demanding 3,000, then it means it requires a total of 30,000 liters. Is it? Total liters of Q needed. Wanahitaji how many liters? How many liters of Q do they need? How many liters of Q do they need? 38,000. Available liters of Q. Wamepewa ngapi? 31,250. That's what the company can afford. Now, do we have surplus or deficit? Tuko na surplus or deficit? Do we have a surplus or deficit? I'm told this term here should be deficit or shortfall. Haya, kama ni shortfall, how many liters? Shortfall, how many liters? Shortfall, how many liters? Shortfall, how many liters? 6750 liters. Imagine from here to this point, you have 3 marks. Surely, these people are wasting marks. Just doing this simple thing, you have 3 marks. No. That is not realistic. They are wasting marks. Just doing this, you have your 3 marks. Anyway, let's forget about it. That is it. That is Roman 1. Roman 2, the optimal production mix based on the priority ranking. That's now when you get to this part, up to the point of doing ranking. So, less variable cost. The one of the variable costs which we have there is direct material Q. For them to produce 1 unit of L, they are going to spend a total of 200 shillings, 250. Then we have material T. For them to produce 1 unit of L, they're going to spend a total of 400. They're going to spend 200. After direct materials, we have direct labor. The other question we were dealing with, it was about the number of clients. And the limiting resource was hours. Here, the limiting resource is now material. So get to understand how those terms are used interchangeably. Then direct labor, they're going to spend 280. They're going to spend 350. Then we have overheads, the variable overheads. Overheads, they are going to spend 160, 200. Then we have fixed production cost per unit. Sasa niko na question. Will we also bring fixed production cost per unit to be part of the contribution here? Will we bring it here? Do I need to bring fixed production overhead per unit? No. So it automatically tells you that when you are going to do a question under limiting factor, which method are you using? The costing method. Back to topic number 7. Which costing method are we using here? Which costing method? Marginal. And we said some of the applications of marginal costing. Ningapi? Topic number 8. So in topic number 8, if you bring absorption costing and bring fixed cost to be part of the product cost, hapo umepata 0. Just by remembering this, just say that topic number 8 is application of marginal costing. So anytime you're going to take fixed cost to be part of product cost, jua tu hapa unakosea. Achana na hiyo procedure. So let's now get contribution. Let's now get contribution. Selling price minus all variable costs. Please explain how to locate the limiting factor. The limiting factor, 1, the examiner will be giving you it, but not always. Hapa examiner atakuwa anakufanyia nini? Anakupatia. The examiner will be giving you it. But if the examiner has not given you it, this is what they are going to tell you. Material Q available 31,250. Then they come here and tell you material. Just look at it. Material T available is, so material T, is material T given in liters or in kgs? Let's see. Material T is given in liters as well. So I want somebody to take this one here. That is 10 times 1,000 plus 5 by 3,000. That will be 10,000 plus 15,000. 35, 40,000. Okay. Material T, this is what the examiner will tell you, imagine. So they are going to bring additional information number 5. Additional information number 5. They tell you material Q available is 31 to 50 liters. Is it? Material T available is 40 liters. Have they mentioned any limiting factor there? Have they mentioned any limiting factor there? Have they mentioned any limiting factor there? So can you tell me the limiting factor? You are given this. Material Q available is limited to 31,250. Material T available is limited to 40 liters. So how do we identify that? You go to this material Q, you look at the market demand, you calculate everything and see if whatever they need is more than whatever they have. Let's come to material T and also get to understand, is it a limiting factor or not? Now, if you look at that question, we are given that the cost per direct material T is 40 shillings per liter. 1 liter is equal to 40 shillings. They spent how much to produce L? They spent 400 shillings. So how many liters did they use to produce 1 unit? How many liters? How many liters? 10, is it? So for them to produce L, they need 10 liters. And the market demands how many units of L? 1,000. Tunakuwa na 10,000 liters. Then we come to G. For them, 1 liter is equivalent to 40 shillings. But how much did they spend to produce 1 unit of G? How much did they spend to produce 1 unit of G? How much? Not 5, you are lying to me. How much did they spend to produce 1 unit of G? You are given material T, 40 shillings per liter, then the amount, 200. E, unaeka 200 shillings. So how many liters did they use to produce 1 unit of G? How many liters? They used 5 liters. Now come to G and use your 5 liters, multiply by the units demanded by the market. Market inahitaji units ngapi? 3,000. How many liters do they need to produce what the market demands? How many liters? 15,000. Ukiongeza zote unapata ngapi? Ukiongeza zote unapata ngapi? 25,000. 25,000 liters. Now, here we have total liters of T needed. Then available liters of T is 40,000. Tuko na deficit or surplus. The market needs 25,000 liters. The company can afford 40 liters. Tuko na surplus ama deficit? Tuko na surplus ama deficit? I'm told we have surplus. of how much or how many liters? We have a surplus of 15. What is the limiting factor between the two? Is it material T or Q? What is the limiting factor between the two? Is it material T or Q? Is it material T or Q? Is it material T or Q? It is material Q. So, is your question answered? Was this here? There's someone who asked us that question. Vanessa, is your question answered? Is your question answered? I do not know the next thing they're going to bring, but if they have to bring that, they either give you this directly or they give you the limited quantity for each item. So it's upon you to calculate them one by one and get to know the limiting factor. Another mistake that others will be doing is this. If you are given this quantity in this manner, yes, you've identified that material Q is the limiting factor. When calculating contribution, imagine some people will be deleting this material Q. They're not going to put it here. Somebody will be saying that, okay, material Q is a limiting factor. I can't put it here to get contribution. That is the beginning of getting 0. Material Q, if you come to variable cost, it is, if you come to contribution, it is selling price less variable cost. The variable cost, we have direct material, we have direct labor, we have variable production overheads. And direct materials are here, 2 different materials. Both of them are going to form part of the product cost. Whether it is a limiting factor or not, it must form part of the product cost. Tumeelewana? It must form part of the product. It must form part of the product cost. So is that clear now? Is it clear to somebody? Is it clear to somebody? Good. So let's now go ahead and get limiting factor per unit. Limiting factor per unit. We said that how many liters do they need to produce 1 unit of L? How many liters do they need to produce 1 unit of L? Tulitumia hapa juu. 8 liters. So you come and indicate 8 liters. How many liters do they need to produce 1 unit of G? 10 liters. Good. Having done that, can you now give us contribution per limiting factor? Contribution per limiting factor will be contribution divided by the limiting factor. So the first one tunapata ngapi? 96 divided by 8, 120. 1100 divided by 10, 110. Then rank the 2 products. Number 1, the higher the contribution per limiting factor, the more profitable the product is. So number 1, number 2. Number 1 is this one here. Sasa tukuje hapa. Let's now get to this point. Number 1 is L. The market demands 1,000 units of L, and therefore I'm going to produce 8 times 1,000 units of L will be 8,000. Balance of the resource, material Q available is 31,250 liters. The balance will be 31,250 less 8,000. Tutakuwa na ngapi? Tutakuwa na 23 tutakuwa na 23 to 50. Is it? The second person to confirm, is it 23 to 50? Is it 23 to 50? Good. Now that we have 23 to 50 liters, that is what we are having. That is what is remaining. Is it sufficient to produce all units of G? Is it sufficient to produce all units of G? The market demands 3,000, which makes us to need a total of 30 liters. But the balance is 23 to 50. It cannot produce the 30. It cannot produce the 3,000 units. So how many units of G will the company manage to produce? 1 unit of G is equivalent to 10 liters. But the balance that is remaining is 23 to 50 liters. So how many units of G will they manage to produce? How many units of G? 23 to 50 times 1 over 10. How many units of G will they manage to produce? How many units of G will they manage to produce? How many units? 23, 23, 23, sorry, 23, 25 units. Higher. They will manage to produce 23, 25 units of G and produce 8,000 or 1,000 units of L. How many units will they not able to produce? How many units will they not produce? How many units will they not produce? Because they can only produce 23, 25. They will only produce 23, 25, but the total demand was 3,000. So 3,000 minus 23, 25. Tunabaki na ngapi? 23, 25 tunabaki na ngapi? 23, 25 tunabaki na ngapi? 675. Now, if you are told that the ones that they were not able to produce, they outsourced from external supplier at a given cost, outsourced units zitakuwa ngapi? Or purchased. Let's talk about purchased units. Purchased units will be of G, what the market demands is 3,000, less what they manage to produce, which will give us 675. Tumeelewana sasa? Is it now clear to somebody? Is it now clear to somebody? I'm trying to tackle all the angles of the question. Is it clear to somebody now? Are we together? Are we together? Tuko pamoja kweli? Yes, are we together? Are we together? Good. Now, as per our question, Roman 2, the optimal production mix based on the priority ranking. Based on this ranking, what is the maximum units of each product? Our maximum units of each product, for L, they will be producing 1,000, the all of it. For G, they will produce 23, 25 only. If they have to outsource, they will outsource 675, but there is no outsourcing or purchasing option. Sasa hiyo tunafanya nini? Tunasahau. Then we get to Roman 3, the net profit at optimal production mix. Tulisema nini? Net profit at optimal production mix. You repeat the same thing, but stop at that point. Of course, for my case, I'm just going to go with this, but for your case, you'll do it somewhere. Do this up to this point here. If you want to answer Roman 3, the examiner will not penalize you if you start from just this point. Imagine you have done away, you did your ranking in Roman 2, you got this contribution. Then, when you are tackling Roman 3, you delete all this. You only have contribution per unit, or you start from that point contribution here. The examiner will still mark your answer. So just try to save on time. So having done that, let me come and bring now the units produced. They managed to produce 1,000. They managed to produce 23, 25. Total contribution. Total contribution. Somebody to calculate for me the contribution for this one here, because this one I can get. Ya huku ni ngapi? Contribution ya huku. Mtu ashapotea tena. Catherine, which part are you not getting? Tumesema, remember, selling price per unit does not change, but our revenue will depend on the units produced. Variable costs depend on the units of output. Variable cost depends on the units of output. I'm saying, because this one here, as you can see, this one will not be affected by anything. But if I want to get total contribution, it will be contribution per unit multiplied by the units produced. In short, if you decide to do away with everything, you only have your contribution. You can start from this point. Let me make you understand now. You've done Roman 2. You got the right figures contribution. Start from that point. Start from here. You'll still get your full marks. Anzia hapa. Contribution of L, contribution of G. Then you give us units produced, total contribution. Calculate TV. You'll still get your full marks. You'll still get your full marks. After getting that total contribution, there's another thing which they try to twist it in all manners. The other time we were told that total fixed cost was 400,000. Here, they have decided to hide it. How are they hiding it? They are taking you to think beyond the box. They are taking you back to topic number 4, overhead absorption rate. They are touching slightly on topic number 7, the overhead absorption rate. How do we get overhead absorption rate? Overhead absorption rate is equivalent to the total overhead divided by activity level. In our question, look at Roman 1, additional information number 1. The fixed production cost per unit is based upon an absorption rate of 200 per direct labor hour. 200 shillings per labor hour. Total overheads, what are they giving us there? Total annual production activity is 90,000 direct labor hours. So we don't know this, but we have been given 90,000. Are we together? Are we seeing something back in topic number 4? Tunaona kitu hapa kweli? Total overheads divided by activity level. Our total overheads are tujui. We are given total activity level, which is labor hours, and we are given the rate. Is it possible for us to get X? Is it possible for us to get X? I am nipatie value of X then. Our X is basically the total overheads. Nipatie value of X. Give me the value of X. X will basically be equal to 90,000 by 200. Itakuwa ngapi? Everyone should be able to get X. Everyone should be able to get X. Na hiyo X ni, that X, the 18 million, ina represent what? The fixed production cost per unit is based upon an absorption rate. So our total fixed production costs, are equivalent to 18 million. But what are they saying? After the full stop, they are saying a 12th of the annual fixed production cost will be incurred at 12th. So in this particular period, when they manage to produce 1,023.25 units, the total fixed production overheads that were incurred, total, so the fixed production costs incurred should be equivalent to 1/12 of the total. Inatupatia ngapi? A 12th of 18 million. A 12th of 18 million tunakuwa na ngapi? A 12th of 18 million tunakuwa na ngapi? 1.5 million. Hiyo ni fixed production overheads. Haya, give me this one here. Total. So total contribution. Total contribution unapata ngapi? This plus this. Ukiongeza hii na hii unapata ngapi? Ukiongeza hizo mbili unapata ngapi? Ukiongeza hizo mbili unapata ngapi? Yes, do something. $35,17,500. 35. $35,17,500. That is the total contribution. Then we have less fixed production overheads. The fixed production overheads ni 1,500,000. Then additional information number 2. In addition to the above costs, non-production overhead costs are expected to be 577,500. So less fixed non-production overheads or costs are equivalent to 577,500. Now easy to less. Are you able to give us net profit for this company? Is someone able to give us the net profit for this company? Net profit for the company? 1,440,000. 1,440,000. 1,440,000. Is it clear? Is it clear now? Is it clear? Is it clear to everyone now? Have we seen what is going on? Have we seen how to deal with the limiting factor? Have we seen how to deal with the limiting factor? That is all which you are required to do. Of course, if you add it to what was provided there, remember I said the advanced level students for AMA have also covered this concept. It's part of their content. So it means if you also get to the folder that I provided to you, there are these videos covering the multiple products, break-even point, margin of safety, expected sales, target profit. Tumefanya vitu kama hizo. Have we done something about the target profit? Have we done something about the target profit? Though very tough, continuous learning is required here. Very, very simple. The simplest concept. Okay. So I think on our Thursday's class, we should be able to do that, because I want to spend the remaining 18 minutes to show you how you're going to